Hey everyone, and welcome in today's weekend market talk. Today we have two special guests, Cantonese Cat and Matt. How are you guys doing?
Doing great.
Peachy as usual, Luca. Always happy to talk with you.
IWM is breaking out. Ethereum has formed new all-time highs. What do you guys think on it?
I'm bearish. No, I'm just kidding. I'm pretty bullish on the overall market. I think it's been the writing has probably been in the wall, and it looks like it was going to break out. It's happening, guys.
Yeah, there's just
Finally
nothing bearish about IWM breaking out at all. Just it shows risk on. That's what it shows.
Yeah, I agree. And the price just broke above this high time frame resistance range, which acted as a major reversal point at past. As you guys can see here and here and here, each time it got tested, all throughout 2024, it acted as a major reversal point. Here is this high time frame resistance back in February, and then eventually broke down, and we had this major crash in early 2025. And I think that the fact we have broken above it, right? Initially, we had a rejection here, then a pull back into this golden pocket between the 0.5 and 0.618 Fibonacci POIs, and then it eventually broke out. And I think that this is just a clear sign of strength. And I believe that moving forward, small caps are very likely to continue outperforming traditional equities in the S&P 500, mainly because as we move deeper into a risk-on environment, we have this tendency that market participants and the general markets favor risk assets more because they start chasing potential gains over strong fundamentals necessarily. What do you guys think on it?
I think that whenever things break out, just let it play out and then see how it goes. I have been, looking for this breakout. We've been, kind of speculating based on technicals, based on international markets, based on how Ethereum dominance has been going up, based on how small cap has been looking like it wants to break out and has been lagging behind and has been in an accumulation zone for years. So this is like confirmation, to what we've been thinking about. So it's promising.
Yeah,
Matt, do you have any thoughts?
and for me, yeah, I mean, whenever things break out, a lot of people are like, "Oh, should I just sell out? Should I take profits right away?" But for me, it's like things are just breaking out. I think they're just getting started, especially when they're going pretty close to previous cycles highs, right? And when we see that, that means it's probably going to go to Fib extensions. It's probably going to go to the higher levels above. So I would not be taking profits personally in that situation.
What do you think drove this move up and this final catalyst to start this risk-on environment?
I think just more and more liquidity is coming back into the markets, and you can just follow the global money supply, and it just keeps on increasing. So it's gotta go somewhere. And basically, when you look at the QQQ and SPY, they've already gone up quite a bit. So just got to rotate into that more risk on stuff.
Yeah, I think it's pretty interesting. Pretty much based on the last couple of cycles, it seemed that whenever global liquidity wants to finally break out and go up,
Yeah, I mean, the fact that we have
that
broken.
happened, and I think we got the rug pull that happened in April. Yeah, go ahead. Sorry, I think I lost my connection there a little bit, but I should be back. Go ahead.
Yeah.
Yeah, I think that the fact that we have broken above the 0.786 Fibonacci POI, which is pretty much the final important one when we're looking at a Fibonacci retracement, tells us that new all-time highs are most likely coming next. And that's the way I'm currently seeing this and interpreting this. I believe that this is just the start of the risk-on environment. The fact that we have a risk-on environment tells us that we are moving closer, we are moving later into this cycle, and that this is pretty late in this cycle. Generally, what happens is that as we move closer to the cycle top, we have this sort of risk-on environment to lure everyone into the markets, making everyone think that something really bullish is going on, when in fact we're just seeing the final distribution away from the traditional equities that have outperformed small caps, or the risk assets rather, for such a long period of time. And now investors are starting to chase risk and gains, because that's the type of behavior we tend to see as we move closer to the cycle top. So what do you guys think about how this all fits into the broader cycle?
I'm more interested in hearing your thoughts, actually. I mean, if the IWM is breaking out, and if it's going to form all-time highs, that usually signal for a very risk-on environment. And if you look at previous cycles, it's just it lasts for a while. It can last anywhere from like 6 months to a year. Whenever IWM starts to make all-time highs after all-time highs, and that's usually the inflection point where you have more, large caps rotating to small caps. You have more high debt companies. They're more speculative, and speculation is going to run wild. I think people are going to look for the next thing, and they are going to end up chasing growth. Usually, when that happens, which is going to also be good for the crypto market too. I think the same phenomenon is probably going to happen with the large caps to the smaller cap, crypto as well. It's probably going to be overall trend, is my thought. What do you think, Matt?
Yeah, I agree completely with that. Just overall trend, not much to add. But yeah, I really want to hear your thoughts on it, Luca.
The way I'm seeing it, I think that it's very likely that this phase will lead up to the cycle top, because the way I'm seeing it, and this is the same thesis I've been covering since early 2025, when a lot of people got scared. I thought myself that market makers were accumulating, right? We saw these kinds of liquidity traps being set up on Bitcoin, all those liquidation cascades we all remember. And that was pretty much the accumulation process. And I thought to myself that, okay, at some point we're going to have a big swing from the state of uncertainty and fear to a state of full-blown euphoria, right? Which is also the emotional gap thesis I've covered in many of my prior threads or videos, and in some of my collaborations with you guys as well, because that's generally how market makers shift the environment from an accumulation environment to a distribution one, by inducing this very rapid transition. And I believe that, and this is all proven by history, that volatility tends to make people really emotional, right? And generally what happens is that when we have volatility fueled with an increasing risk appetite and bullish narratives like rate cuts or the end of quantitative tightening and the Fed finally stepping away from their quantitative tightening measures, is that we generally tend to have people appealing to certain emotional or cognitive biases, like the confirmation bias, to confirm that their thesis is going to play out by using all of those and attaching to all of those bullish narratives. And that's the reason why I believe we're this late into the cycle, because as we are having bullish narratives emerging, and we are seeing them, right? Rate cuts are just the first step. The next one is the end of quantitative tightening. The next one will be the Fed slowly start to transition to a quantitative easing environment, which I think will be, in fact, pretty much the end of the distribution phase. That's where the peak of the euphoria will be, in my view. So I think that these sort of positive narratives have the role to lead to distribution phase and to make the emotional gap form in such a way that retail investors will then start to appeal to certain emotional biases. But I also think that this environment is extremely bullish for risk assets, right? I think it's really bullish, especially for small caps, as well as for altcoins, which is also the reason why I believe Ethereum has formed new all-time highs. Because as we move deeper into this risk-on environment, risk assets are the ones that are bullish, right? Simply put. So yeah, that's my view right now, and I believe that moving forward, we're going to have a very similar period to the one we've seen from October to December of 2024 in traditional equity markets, with the S&P slowly grinding higher, but the liquidity is actually going into risk assets, as we all remember that massive blow off top we've seen back in November of 2024. And I think that we're going to repeat exactly that, but just on a larger scale, because we're going to see this distribution phase lasting for longer, and also the blow off top in risk assets also lasting most likely for longer.
Yeah.
I mean, I think a lot of people get confused when we talk about distribution. They can distribute all the way up. Whenever you're talking about price going up, like there's going to be some whales and some institutions and some big money they are starting to distribute. They're starting to take some profits. That phase can go on for a while, though. I think the question is when you're talking about a potential blow off top, it's hard to kind of time it, and I'm kind of curious, Luca, in terms of what your thoughts are in terms of the timing of it. That's thing number one, based on previous cycles and based on what you see from previous experience. The second question is: are blow-off tops common? Is that something that we generally would expect to see, or is there something that you're seeing in this particular cycle that makes you feel that blow-off tops is more likely the scenario than not? I guess, yeah, to summarize, like the timing of it and also the likelihood of a blow off top versus not. So.
The way I'm seeing it, it's very likely that timing will be within the next 3 to 4 months, maybe last for longer. But my personal scenario is that it's going to last for about 3 to 4 months moving forward before the real risks of a cycle top formation emerge. And it's at the end of the day, it's really a level by level market, and it should be treated as such. Nobody really knows what will follow next with 100% accuracy. So I believe that the most important thing you should have as an investor is flexibility and being able to adapt yourself quickly, because the markets generally do not perform based on fundamentals. If we remember what happened back in early 2025, we had that massive drop in equity markets and the rest of risk assets, which were all driven by speculation, right? There was nothing fundamentally that has fundamentally changed, but it was all speculation on tariffs, on the potential of a stagflation if tariffs were to get implemented and so forth. And I think that this time it will be driven by speculation once again, but this time to the upside, because everyone will speculate on the idea of rate cuts, of how new liquidity will get injected in the financial system and so forth. So I believe that moving forward, the best approach is not to try to time the top, because a lot of people try to do that and they fail. But instead, I believe that the best approach will be to gradually secure some profits while rotating into assets that are safer and that have a lower volatility, so that eventually when the broader markets top out, you're already well diversified and you've also kept the upside optionality intact, right? Because you haven't sold all of your assets, but you are able to adapt yourself when the markets eventually roll over. And that will be my personal strategy moving forward. I'm curious to hear your thoughts on that. What strategy will you follow moving forward?
I think that matches ours too, because that's basically distribution, right? On the way up, you're just going to take profits and roll it over into something else. And that's basically what institutions do. That's what I'm going to be doing. That's probably what Kat's going to be doing. Don't want to speak for him, but I think that's just the safest approach, because trying to time the top is like trying to time the bottom. Like your odds of being successful are not there. So you got to accumulate in support zones and distribute in high time frame resistance zones.
Yeah, I'm a little bit conflicted on that, because as we've seen with assets, with with Bitcoin, with Ethereum, with Solana, Palantir, with Tesla during the previous cycle, sometimes they can hit escape velocity, and sometimes the trend can be very powerful, and it's extremely difficult to time the top. And it's also, it's also possible to be taking profits too early as well. And a lot of people have been learning that painful lesson with like Nvidia, the cycle with Palantir as well. So I don't know, whether or not I would be able to time the top, and I don't think that's really the purpose here to do that. But that's what we're looking at with IWM, is when you have small caps that still haven't really broken out. The Russell 2000 still hasn't really broken out into all-time highs. I don't think that is risky right now. Whether or not it's going to be 3 months, 6 months, a year, is really tough for me to say. I'm going to keep an open mind for that, because sometimes when I see things kind of breaking out with potential escape velocity, I don't want to just also assume that it's just going to be 3 or 4 months, because you can have potential downside risk for sure, and the higher we go, there's going to be more downside risk, but you also have upside risk too. The worst thing that I think market participants can do sometimes is, if you're going to take profits and don't go back in, right? I think the worst thing that market participants could do is they take profits maybe a little bit early, and they see the asset keeps on going up, and they re-enter because they cannot handle the FOMO. That's what I
That's a
worry
classic
about.
mistake. Yeah.
That's a classic mistake too. So I think it's good to kind of keep an open mind on both sides. If the trend is your friend, like I'm more flexible and willing to kind of give it more time to see how it plays out. Um, and usually, like, even if it has a blow off top, usually there is still some signs that allows market participants to look for warning signs to get out after the top, right? Like, it doesn't always just drop all the way down. Usually there's a little bit of a bearish back test. So that's kind of another philosophy to kind of look into that as well. That those are kind of my thoughts.
Yeah, I think that
Yeah.
another mistake some people do is that they take profits from an asset that has performed really well. Like, for example, altcoins. It's the thing I've seen most back in 2021, with a lot of people securing profits on a lot of altcoins, then rotating those same profits back into other altcoins that were even more volatile, more risky, but that could have bring more gains. And then they eventually round trip all of those gains. So I think that once you start rotating out of an asset, the best approach is not to rotate back in, because that's generally how FOMO appears, or how chasing more and more gains starts to emerge, and eventually you're left just holding the bags at the top.
Yeah, I agree with that.
Yeah, I see, Matt. You kind of rotated to your screen. Luca, do you have anything else to think about with IWM? Any other thoughts on that?
I would be interested in hearing your thoughts as well.
Well, I before we switch topics, I just wanted to show you why I think things are more beginning than they are ending with this IWM chart, and it goes back to basically the 2008 crash. And you can see, like, once it got back above that 886, you can see it just started going to the fib extensions above, and it went basically to the 1.414 and then the 1.618, and then kind of crashed a little bit back down to the 1.272. So that was signs of the 886. It was just the beginning, right? And then we can go basically to the time period right up here, where the 2018 top and the bottom, it did the same thing. It went to the fib extensions above, and then it came back down. But essentially, once it right here back in 2020 of November, it broke above the 886 and just kept on going, right? And we're kind of experiencing that same situation right now, where we go to the top, right? We go to the 2021 top and the bottom here, and now we're getting back above that 886 again. So where are the fib extensions above? Well, they're at the 1.272s, 273, all the way up to 315. So I think that's the likely trajectory of where things are going, given by the past cycles. And usually the trend is, once the 886 is kind of broken and flipped to a support, then things just don't really stop. Especially, it already had one fake out before. So the likelihood of having another fake out is not very high. And I think it's just going to go to the 300s, maybe even above. So this is why I think we're in the beginning stages of the altcoin euphoria. We're in the beginning stages of risk on, and I don't think we're anywhere near the end. Kat?
Yeah, I can show my IWM chart here on like the higher time frame on the monthly. It's I agree with all the Fibonacci retracement levels and all that. But one thing I like to illustrate cycles usually is through the monthly Bollinger Band. That basically what happens pretty much the majority of the cycles, and I think we're seeing the IWM chart here on the monthly. You see one cycle here, another cycle there, another cycle there, another cycle there, and I think we're getting ready to kind of start, another bullish phase here. I will show you the 2-month chart too. That's actually going to be a little bit more illustrative. But basically, every single time when you look at a monthly chart here, whenever it gets close to a low Bollinger Band, and it did get there multiple times this cycle, and that was like back in April when it got close to low Bollinger Band there. That was a perfect buying opportunity, because whenever it gets to low Bollinger Band, and even COVID here broke down underneath of that, that was a great buying opportunity. Like, that it's going to end up getting bought up there because it's just way too far. Same thing over here in 2016, in February, 2016. Those are great buying opportunities, and whenever you end up having that kind of crazy volatility and you end up reclaiming the 20-month moving average and back testing it perfectly, and you start to have a little bit of Bollinger Band expansion, that's when you're really talking about a very bullish phase. And again, that can last for anywhere from like 6 months, maybe a little bit longer. Here it just kept on going up for and make all-time highs there for like a year and a half, 2 years. Same thing happened over here for like a whole year. So it's hard to say for me in terms of how long it lasts. I'll illustrate this a little bit better with the 2-month Bollinger Band here. If you can just look at since the Great Financial Crisis here, whenever you have a Bollinger Band squeeze, is usually during the bear market when you have consolidation, and whenever it starts to expand, you get a pretty bullish phase that happened for quite some time. Now, during the last cycle, it didn't really last that long, but even then it lasted for maybe around like 6 to 8 months. We're starting to kind of get that bullish expansion over here. It tells me a little bit more impulsive move is going to happen here. So that makes me feel that there's still room for the IWM to run. On top of that, when you look at the Ichimoku cloud here, whenever it taps the cloud or even gets through the cloud or touch the bottom of the cloud, those are great buying opportunities. And whenever you end up finding support there and bounce and reclaim the blue and red line, the Tenkan Kijun, usually these becomes very, very bullish because you basically took out all the stop loss. You basically have deleveraged the entire system, and it looks like it's getting ready to go. And I think that also fits the Fibonacci, retracement levels too, in terms of breaking this 0.786 and 0.86. It looking like it's getting ready to do some great things here. Just looking at the structure of this, like this is a big, giant accumulation zone that has been happening for years. I think it's gonna do some pretty great things. So how long it lasts, hard for me to say. I'm gonna keep following the Bollinger Band to kind of get guidance from that. So those are my thoughts. Luca, do you want to talk about other topics in mind? I think with this kind of setting the stage, it'd be good to talk a little bit more about like Bitcoin, Ethereum, alts, to talk about how you think about the crypto market is going to end up, being reflected based on this kind of environment.
Yeah, I have the Bitcoin dominance here I want to share.
Yeah, please take over.
So basically, the thing with the Bitcoin dominance is that it has broken below multiple support levels. First, it has broken below the weekly bull market support band, which, as you guys can see here, has been the main reversal point all throughout this bull market. Each time it got tested, it acted as a very strong support point. And then we had this breakdown. The last time we had the breakdown was all the way back in November of 2024. But that time we didn't really have a bearish continuation like we had back here. Instead, we had this very rapid reversal and then reclaim of the bull market support band and eventual continuation to the upside. Then we also broke below the November highs, which is something major because initially it acted as a strong support point, as you guys can see here, as that level also coincides with the 0.618 Fibonacci POI, which has also failed to hold. So I believe that this is telling us that, the risk on environment is starting and that the risk appetite, the risk reward setup now leans in favor of altcoins rather than Bitcoin. And I believe that moving forward in the next couple of weeks and months, the most likely outcome is that altcoins will outperform Bitcoin, which is also the reason why over the last couple of weeks I have gradually reduced my exposure to Bitcoin and gradually increased my altcoin position and my altcoin exposure, as I believe that they are very likely to keep outperforming moving forward. And the same thing applies for small caps when compared to the traditional equities in the S&P 500, which are also primed to outperform moving forward. So that's how I see things. And a very strong confluence to when Bitcoin could actually top out will be, in fact, when the Bitcoin events will bottom out and will form the first signs of bottoming formation, because that generally tells us that the distribution phase is close to an end, and that moving forward we have the potential that the liquidity has already been rotated out of Bitcoin into altcoins, and when profits get taken out of altcoins, that's generally when we have the cycle top formation in itself. So the first range I'll be tracking will be this major high time frame support range that has acted as an initial resistance range back in 2024 and then as a very strong support point back in December of 2024. And this level also coincides with a 0.5 Fibonacci POI, which makes it a really strong support point. Now, I think this will act only as a short-term support range and potentially to a short-term bounce. The range I'm really tracking for the potential of bottoming formation on the Bitcoin dominance will be the resistance range from the bear market here, which coincides with a 0.236 Fibonacci POI. That will be the main range I'll be tracking that could give us an indication that, okay, the distribution phase is coming to an end and we have the potential that Bitcoin is topping out now and that we have serious risks that the broader market has topped out as well. So this will be a really strong confluence moving forward that I'll use. So yeah, these are my thoughts on the Bitcoin dominance. What do you guys think? And how do you see the Bitcoin dominance playing out in the overall cycle moving forward?
Yeah, I think Bitcoin dominance is on the decline as well. I have a couple ways to show that, and one of them is through the Ethereum and Bitcoin chart. And it's breaking above the 382 from the 2017 top back here to the 2019 bottom. I just wanted to just show this, how it hasn't really broken above that since it kind of collapsed back in October of 2024. And this is the first monthly candle that's looking like it's going to finally close back above it. So this is a bullish scenario, which means that it's probably going to outperform Bitcoin, which means Bitcoin dominance is going to be on the decline. And then we can also just go take a look at total 2 compared to total. And we can also see that this is breaking out above 2, right? And it's breaking above the 50% fib. And I think when total 2 is everything except for Bitcoin, right? So this is just shows more outperformance as well, which is kind of a similar thing to that dominance. And then when we just look at the others chart in general, we can see that it's also just still stuck in a range between the 786. But when we add on the Ichimoku cloud here, we can go to the weekly chart. And essentially, it's trying to finally break through that Ichimoku cloud, which just shows, in my opinion, that it's about to break free. And that means that Bitcoin dominance is probably likely to fall if altcoins do outperform significantly. So there's just many signs when you look at total 2, when you look at Ethereum over Bitcoin, that Bitcoin dominance is on the decline. It doesn't mean that it's going to go crater to the earth and then be a bearish crypto. No, it just means that it's going to do well, but altcoins, Ethereum especially, they're going to perform much, much better.
Yeah, I mean, I'm not going to go through too much technicals. I think those are what I'm seeing here too. But I just kind of want to talk about like on a higher level in terms of what I think here. This is something that's been circling around like the crypto world for many years. I took this from Reddit. This is like, there's really nothing special about it, but the idea is we've had enough cycles to kind of know how this behavior generally works, right? I mean, wherever everybody gets too excited about Bitcoin, especially the maxis, they're oh, Bitcoin. Next thing you know, Bitcoin dominance tops, and you end up rotating large caps, such as what you're seeing here with Ethereum, when it's finally showing some rotation there with some outperformance there. And we also started to see some signs here with some of the larger caps, like Chainlink has been doing well, and some of the older larger cap crypto has been doing well. And eventually going to rotate to mid caps and low caps, like these micro caps. Eventually going to end up pumping because that's just how the cycle goes. Because the people have been accumulating all of these things, and they want to basically send liquidity from one thing to another, and basically just pump their bags, and that's just kind of how it always works. Eventually, money is going to flow back to Bitcoin, and then during bear market, eventually money is going to flow back to fiat, and that the whole cycle begins over and over again. And there's really nothing special about the cycle. The only thing that's special about the cycle is that Bitcoin dominance has been going up for a very, very long time, like more longer than the last cycle. This is basically just a way to kind of show the timing of it. I can even get rid of the FIP level here because it's not really that relevant to the discussion. But you can see last cycle, Bitcoin dominance went from maybe January 2018 to maybe December of 2020, roughly for about 2 years all the way up and then consolidate sideways here for a year and then just plummet, right? Here, how long have we been having Bitcoin dominance just keeps on going up? Really talking about the bottom point, maybe like September 2022, but really even before that, it's been going up straight for almost like 2.5 years. This is an extremely long period of time where Bitcoin dominance just keeps on going up. Whenever you have Bitcoin dominance start to plummet, and I'm kind of looking through here from the point where Bitcoin dominance starts to plummet and money starts to rotate to altcoins, all the way to the Bitcoin cycle top. Over here, Bitcoin cycle top was December of 2017, right? Over here, the Bitcoin top was in November of 2021. And who knows how long this is going to be. We're going to be a little bit more speculative about it. But to the point when it starts to plummet over here around March of 2017 to the Bitcoin top there, it took about 10 months or 9 months, I should say, because they're 9 bars. Here from like January 2021, when Bitcoin dominance starts to plummet and things start rotating to altcoins, to the Bitcoin top here in November 2021, there's about 10 months, right? So 9 months and 10 months. It took time for that rotation to happen during the last 2 cycles, and we have just started to kind of happen there. It's hard to know whether or not this is going to be a quick cycle where it's just going to be maybe like 5 months. If that's going to be the case, it's December of this year. If it plays out very similar to the last 2 cycles, then you might extend for another quarter, maybe like 9 months all the way through April 2026, and that could be potentially the Bitcoin top. All of this stuff is just more speculation based on previous cycles, but it's hard to know for sure how fast this thing is going to go. If it does, then it's going to be a blow off top, like what Luca is referring to. If it takes its time, it's going to last a little bit longer. So I think it's good to maintain that flexibility to see what the market does. But those are just my thoughts on the Bitcoin dominance. Luca, let's have you taken over. I want to hear about you about your thoughts on other things here too. Anything
I
else
agree
you
with
want to
that.
share? Yeah.
Yeah, I think that there will be a couple of really important metrics we could track. So I want to share here. The first one will be the ASOPR metric. Now, I've discussed about the ASOPR metric in some of my prior collaborations with you guys, as well as in some of my prior threads and videos. This will be very important moving forward because this tells us essentially the amount of Bitcoins that are being sold in profit. Generally, what happens is that each time we have a cycle top and an alt season, we generally tend to have these major spikes in the ASOPR metric, signaling that a lot of Bitcoins are being sold in profit. And that's generally the point where the profits start being rotated into altcoins. And this happened over and over again. So each time we've had an alt season, we had these major spikes in the ASOPR metric, signaling that liquidity started to flow out of Bitcoin and into altcoins. So we've seen this happening in 2017. We've seen the same thing happening in 2021. But interestingly enough, these spikes in the ASOPR metric in 2021 didn't really happen when we had the actual alt season, but they happened before that. So my thesis currently is that we could have liquidity starting to get taken out of Bitcoin before, and then we could have an alt season, right? So it happened in 2021. Now, if we remember what happened back in March of 2024, when we saw these spikes in the ESOPR metric, that's where a lot of altcoins actually formed their cycle highs. So I remember a lot of those Dyna coins forming their cycle highs there. I remember a lot of AI tokens also forming their cycle highs there as well. The main reason was that we had multiple of these spikes in the ESOPR metric, signaling that profits were being taken out of Bitcoin and moved into altcoins. I remember the meme season back in May of 2024, right, with Pepe forming like 300 to 400% rallies and so forth, right? That's where a lot of altcoins outperform, mainly because we had multiple of these spikes in the ESOPR metric. Now we had the first one, and Ethereum formed new all-time highs, right? So I think that this will be a crucial metric to track moving forward, because it will help us to understand when profits are starting to get taken out of Bitcoin and rotated into altcoins. And the moment we'll see multiple of these spikes in the ESOPR metric, that's where I believe the Bitcoin dominance will really start crashing. But that will also tell us that, Bitcoin is nearing macro top formation. Or it can be something like we've seen back in 2021 here, when we had multiple spikes in the ESOPR metric, but the price kept on going higher for a couple more months until we actually had this distribution range and rotation out of Bitcoin and into altcoins. So what do you guys think on this?
We need as much data as we can to basically try to figure out what's going to happen. I think these are. Can you explain a little bit more in terms of like how these scores are coming onto? So these are on-chain analysis. Can you explain a little bit more about that?
Yeah, so basically the way this works is that this metric aggregates a lot of wallets, and generally we tend to have this being aggregated on the total amount of wallets and how they secure profits. So it's generally mixed, but there are a couple more metrics that we can track. And the one I'm most interested in is the MVRV Z-score. Now, we have discussed about the liquidity, but the MVRV Z-score measures basically how overvalued Bitcoin is relative to its intrinsic value, let's call it. So what happens is that once the MVRV Z-score enters this red range, right, which has coincided with all of the cycle top formations so far, that signals that Bitcoin is extremely overvalued, and that generally tends to coincide with cycle top formations. Right now, the MVRV Z-score is nowhere near those levels. So I think that a bullish continuation moving forward and a prolonged blow-off top, right, as I believe we're going to see, is the most likely scenario to play out moving forward. And these metrics are very useful because you can adapt yourself based on them. So once there are further developments, you can start taking either a more conservative approach, or if, for example, the price of Bitcoin goes higher, but the MVRV Z-score doesn't move out of this range, then you can remain bullish on the high timeframes. And of course, there will be volatility as we near the cycle top. I also believe that there will be, in fact, more volatility as we near the cycle top, because generally what happens is that as we near any macro top formation, we have greater volatility so that market makers can trade a larger spread, which gives them more volume and allows them to distribute more easily. But nonetheless, I think that you can use all of these metrics as a way to assess the broader cycle. And as I've mentioned before, I think it's a level by level market, and it should be treated as such. And as we have more developments happening on these metrics, that's how I believe we can adapt ourselves accordingly.
It's always good to have more confluence. I think both Matt and I are more like technical folks. We don't look as much on chain. And just looking at that, and I think you also have some pretty recent post about like sentiment, like on Google Trends, things like that. It's just, I don't know, like it just doesn't feel like we're anywhere near yet. So, but yeah, those are great points that you're bringing out. Matt, do you have any thoughts about these thoughts?
Thoughts about the thoughts. No, I just think that everything is just pointing to nothing is going to be ending soon, right? And that's just what I look for always, is just more and more confluence, whether it's on-chain data or technicals. But yeah, I rely more heavily on technicals than on-chain data. I mean, I do watch like liquidation levels a lot just to see where they are, because price likes to gravitate to the destination of the most liquidity, and that's a very interesting metric to look at. And you can just see there's always chopping around, because the degens are going to keep degening, and they're going to just go get liquidated if they keep on being in too saturated of a point, whether that's on the short side or the long side. So, but no matter what, I think all the data is pointing to things are going higher, which is what people want to hear.
Talking about things going higher, we're having a very interesting setup being developed on the Velo data, which is something I track quite frequently, especially to assess the low time frames. Here we have the price action, the open interest, which measures the total amount of perpetual positions of both longs as well as shorts, and the funding rates, which represent the ratio between longs and shorts. Generally, what happens is that when we have the price going down while the open interest is going up, signaling that there are more perpetual positions, while the funding rates are going down, it signals that bears may be doubling down on their short positions. So you can use this as a really reliable confluence, because this has a very high accuracy rate to assess the low time frames. And this suggests that shorts are piling in. Given the fact that we are in a weekend, we can you know we know the fact that in weekends there is less liquidity being traded, so markets are much easier to be manipulated. So I believe that we could have some things going on moving forward. And first of all, that is volatility. I expect a lot of volatility in the upcoming days, which is why I urge everyone not to use leverage. I think that using leverage is a really dumb idea, especially that so many profits can be made purely from holding spot positions and not playing with leverage, and that includes options too. And a lot of people got liquidated over the last couple of days simply because they have been over leveraged, and market makers love that. Market makers always love to go for all those liquidity pockets on the liquidation heat map, right? Which is something that we track on X as well quite a lot. And I think that this is a really strong confluence, which tells us that next week might be bullish moving forward. And another thing I want to hear your thoughts on is the seasonality in September. Some people say that we could get a big crash in September because September tends to be the weakest month from a seasonality standpoint for Bitcoin. And some people are quite contrarians to that view in saying that this cycle has been different and that September could be a strong month moving forward. What do you guys think on that?
I mean, I think you already have shared your thoughts in terms of the August seasonality on the Bitcoin halving perspective in terms of where we're at with the cycle. That's actually for you think that seasonality is perfectly being played out, right? Before I answer your question, I kind of want to hear your thoughts. That's what I remember you saying. Is that right?
Yeah, I mean that's pretty much it. That's the discussion we had in our previous collaboration. So seasonality, a lot of people were discussing this idea, especially back in May, because there was that sell in May and go away type of thing. So a lot of people were discussing this idea at the time. And, because we are in a post-halving year, we looked at the seasonality and we saw that all post-halving years so far have been really bullish in the third quarter. So normally, even though from a seasonality standpoint, the summer should have been weak, Ethereum has formed new all-time highs and Bitcoin did too. And that is because we are in a post-halving year where things are a bit different than they are usually.
Yeah, I mean, I think that it's good to look at the patterns too in terms of where you are, in the cycle. And the other hand, the other argument that I have against September to October being weak, well, with the fact that I think August is probably going to turn out to be a pretty decent month. we still have another week. I mean, we had Friday, had like a huge pump. Maybe we end up having huge volatility. I completely agree with you. I don't think that we should be like over leveraged to lose our position, get margin called, and do like short dated calls, things like that. I don't think any of those things should be done. But I think most likely August is probably going to end up turning to be a pretty decent month. And if we end up having further breakouts with the momentum that IWM, Russell 2000 has, and Ethereum has, most likely, I think September or October is going to be pretty decent months. And I think the seasonality argument hasn't really that worked out for those folks that just conventionally just look at sell in May and go away kind of thing. If you sold in May and you went away, how are you doing right now? You're doing absolutely horrible, you know. So the traditional thought would be, you know, March and April would be strong leading into May, and then May would be a time to kind of, you know, take summer vacations because all those folks are gone, you know, and that would be like a little bit more weaker. But that really hasn't worked out. Like S&P 500 went and QQ went down more than 20% like from February to April. This is completely like throwing off. A lot of the deleveraging has already happened, and it's already setting up a stage for something great. And the reaction so far, we've had like a V-shaped recovery. There's really no reason to believe that the argument of seasonality in September to October are going to play out. It hasn't really played out in August. So I'm just going to follow the trend and not worry about those kind of noise. Matt, what do you think?
Yeah, same. I don't care about narratives ever or seasonality or any of that. Just follow the momentum. And what we're seeing now is things are breaking out. IWM is breaking out. SPY, QQQ, they already broke out. So maybe they can just back test a little bit further, but it's not a bearish situation. Bitcoin, it's already back testing now over the past few weeks. So, I mean, things are just doing their normal things of breaking out and back testing and going higher. So just follow the momentum, and the trend is your friend, and I think things are going higher.
Another thing I would be interested in hearing your thoughts are Bitcoin treasuries or treasuries in general, because I'm sure a lot of people are interested in hearing how you guys would think they will perform. Now, personally, because we are in a risk-on environment, I think they're going to perform well in the next couple of weeks and months. I think that a lot of profits could be made off of them, though for me personally, they tend to be a little bit too volatile for my personal risk appetite. So I'm personally not going to invest in them. But objectively speaking, I think they could perform strong moving forward. What do you guys think on that?
Matt, do you want to share some thoughts? I have some thoughts about like MicroStrategy, you know, my MetaPlanet, and maybe a couple of Ethereum treasuries. But do you have thoughts you want to share first? Yeah.
I think, I mean, I can share a BMNR screen. A lot of people are talking about that because of Tom Lee. But essentially, they can always dilute anytime they want. They can do whatever they want with their stock, which means I personally would rather just own the crypto than these treasuries themselves. But I agree, they are starting to look better and better. And just Bitmine, it's breaking out too, right? It's breaking out and it's building a base on top of the 50% fib, which was a previous resistance, and now it looks like it wants to continue higher. How much higher? That's always the question. Maybe the hundreds, maybe the 200s, maybe the 400s, right? I think it does have that potential to continue the journey higher, but they can always just dilute their share price and buy more Ethereum, which is actually even better for Ethereum, in my opinion, because they have all these buyers for Ethereum, which is going to just boost the price up way more. So that's why I would just personally rather be in the crypto itself than the derivative of it.
Yeah, I agree with that. And I also think that, you know, the asset itself generally tends to have a more reliable price history and stronger POIs you can track, stronger levels, and a more reliable market structure overall, which is why I would also prefer to invest in the asset itself rather than these treasuries.
Yeah.
Yeah, I have some thoughts on some of the really hot stuff. You know, for example, MetaPlanet has been the talk of town really for the last, you know, 3-4 months, or 3-4 months ago. Nobody's really talking about MetaPlanet anymore. And I was very, very cautious about MetaPlanet. The reason why that is because I tend to look at the technicals. It was just got listed over the counter in the US not long ago. And you look at the Japanese market in terms of how it's performed extremely well. It's already made like more than 100x. And then it goes to the US and is trying to grab liquidity from the US market. And the very fact that like it's been very, very euphoric, everybody's talking about it, and all these big names are like, really getting into it, got me extremely cautious because of the technicals, because it ran all the way to the 0.76 log fib. And that's a very, very strong resistance level. And on top of that, if you just look at a 3-month chart here, it also ran right into like the Ichimoku cloud resistance, a big giant resistance above, right? So a lot of confluence to tell me to be a little bit more cautious with these kind of plays, just because I worry that they could be liquidity grabs. I don't know like the enough, and they can argue, yeah, if Bitcoin goes up, then Metaplanet is going to go up, and it could still very well be the case. But this is just an example of hype that get people really excited, and people end up losing a lot of money. Like if you end up buying MTPLF, you end up not doing very well over the last few months because of a big giant wake up elf right here. And since then, you have like a tri-star pattern. It just looks like it was having some weakness, and I was pretty public about like I'm not that bullish on this. It's just been brutal. Now, do I think that is stabilizing? Do I think something like this could end up running? Yeah, maybe, because you're starting to see a little bit of like the lower time frame. You start to see a little bit of stabilization, maybe a little bit of bullish divergence that's kind of happening. So maybe it's stabilizing. But this is like a perfect example of what might happen with treasury, with narratives, with things that are being hot, talked about all the time, and what can end up happening. If you're talking about the other stuff that are running a little bit hot, and they're extremely difficult for me to chart. I would say that I think that even though the company's fundamentals are very different from what it was before, I think algorithms still care about these kinds of like log fit levels. And basically, this is SBET. It got rejected here, 0.382, from the high here to the low there, which is not a surprise. It's a pretty strong level. And it broke back down, and it had a hard time breaking above the 0.236 last month. We might still have a hard time breaking above the 0.236 here this month. But I think that overall, even though Ethereum is doing very well, these things follow their own technicals. They're companies. They do their own thing, and they have their own liquidity pool. Like they're not necessarily going to follow what Ethereum is going to do 1-to-1. I do think that it's turning bullish overall in the higher time frame because it's reclaiming the 20-month moving average. But I just don't know like how long, how far this thing is going to go. I have no idea. BMNR is a very similar story. I think if you bought the hype last month when it was way outside the monthly bull in Japan with this big giant wake up above in the triple digits, you're probably doing it wrong. Do I feel a little bit more comfortable in terms of where it is right now that it's touching the bull in Japan? Sure. But how am I going to expect it to moving forward? I do not know, because it's just consolidating sideways in the range. It's probably going to do okay with Ethereum do okay. It's just, you can see like wicks above, wicks below. It also has a hard time figuring out what it wants to do. So if I don't know what they're going to do and if Ethereum is going to break out, I'm going to stick with that. I have a very tiny position in like the 2x leverage ETH. It ran up like 30% on Friday. Like it's just one of those things that like if you are bullish on the underlying asset, if you want to do a little bit more leverage, I think that might be a little bit like I'm not advocating, because I have like a really tiny position on that, and it was completely a gamble. I don't want to make you think I just hold Ethereum. I do have a couple of like technicals chart here. One chart is BTCS, which I think has been forming higher highs and higher lows here on the monthly. And this chart looks much better, because I actually can follow the technicals in terms of what it's been doing, in terms of where liquidity is going to flow into. I have a position in this. It's a small position, but I have a position in this. The other position I have also is BTBT, because I just think that it's been consolidating sideways over here for like 2 years. It looks like it's like a bullish rectangle thing just bouncing off over here. And if Ethereum does well, I think eventually it's going to break into above. So I do have a position in that, but the overwhelming majority of my exposure to Ethereum is Ethereum, and I will maintain that without hesitation. That's my thought on those.
Not ETHzilla. Come on now.
I think they're what is ETHZilla's ticker? I can take a look at it. Look at that. Like what I mean, I can't even say anything about it. This big giant wick above. If I pull a Bollinger Band, yeah, if you bought it all the way up here when it's like way outside the upper Bollinger Band, you're doing it wrong, right? And the Bollinger Band is also contracting. I think this thing's getting stuck here in a range for a while. Is this thing bullish? Yeah, it's reclaiming a 20-month moving average, but I don't know when it's going to run. It might lag behind ETH. You know, the other one that people are also kind of a little bit more into is Game. That's another one. Same thing, right? Bullish red contraction. This thing hasn't even reclaimed the 20-month moving average. The 20-month average is negative sloping. Like, I cannot say that there is a bullish trend going on for these like micro low cap ETH treasury play. I just don't know enough about them. And if you're into them, I think it's fine. That's why I'm saying I don't know what they're going to do in the next 1 to 3 months. So I'm going to stay away from them.
Yeah, and either way, like all of them are going to be amazing for Ethereum because they're all buying it. So why not buy the thing that they're buying? I just don't understand like people that, oh, this is the next hot thing. Well, they're buying the hot thing, which is Ethereum. So why not just buy that? Yeah.
Well, I'm seeing people saying that it's because of like tax implications. I guess a lot of folks cannot really get access to crypto, maybe internationally, or they just don't want to deal with like the complicated, tax code, things like that. So maybe that's the reason why they want to get into these ETH play. But if they want to do that, there are ETFs that are available. So like I don't know why it has to be these kinds of plays. Again, like they could very well outperform later. I don't know. I just don't know enough about what they're going to do.
It is higher risk, so it's like you're avoiding tax implications for maybe losing all your money. So
yeah, I don't think they're going to
the risk
lose
reward
money,
is not there.
Yeah, the risk reward ratio is not as good based on the chart. Like, if you just simply look at Ethereum, like it's like, oh, it's so bullish. Bullish about expansion, breaking above the liquidity zone. Man, like this thing looks very bullish. And
what happened
look
to
at
your
the other
sad
stuff.
faces?
Angry faces and smiley faces.
Yeah.
But it basically have already played out. Like you have the liquidity grab down here, and I think like a lot of the ETH treasury plays, they grab liquidity to the upside, and right now it's just consolidating sideways. And I don't know how long they're going to end up doing that. I just don't know enough about them, so that I'm not getting into them.
Yeah, I have some couple additional thoughts on Bitcoin proxies I want to share here.
Yeah.
So here we have Coinbase. I mean, if you're going to invest in a Bitcoin proxy or anything that is related to crypto, I believe the best way to do it is by investing in something that has a reliable and a strong business model from a fundamental perspective. Now, I think that Coinbase moving forward is pretty much guaranteed to go up, mainly because they have a very high tailwind coming from higher transaction fees. So the way this works, about 70% of their revenue stems from transaction fees from market orders or perpetual positions that investors take on their platform, mainly retail investors. And the way this works is that generally as we near the cycle top, we have higher transaction fees, mainly because there are more people that are using the network itself. And we have more transactions because there are more people that, trade on an active basis as they're trying to either nail to catch the next altcoin that pumps 10x or things like that. And the second thing is that we have higher transaction fees, mainly because we have more leverage that is being used by investors, because generally as we near the cycle top, we have an increasing risk appetite of investors. So that generally tends to translate into higher leverage as people start to become more confident. And the way I'm looking at this, Coinbase has been consolidating right around this high time frame support range for the past few weeks. I think that this is just a good buy zone purely from a risk reward standpoint, because you have this really strong support range that has been holding over the last couple of weeks. And moving forward, what I'm currently tracking on the low time frames and I'm a bit cautious about is how the price will react when it tests this 2-day bull market support band, given the fact that it has been such an important POI over the last couple of months. You can see here acting as a resistance, then acting as a strong support once the price finally broke above it back in April. And now it seems like it's been acting as a resistance ever since the price broke below it. So I believe that this will be a good range to be somewhat cautious on the low time frames. Is if the price fails to break above it, then I think it could lead to some sort of prolonged consolidation before eventually we see a durable move out of this range. But nonetheless, I believe that the risk reward setup is deeply in favor of buyers. And if we were to shift the time frame of this bull market support band to weekly time frame, we can see here that the price has been consolidating right below it, right above it over last couple of weeks, which I believe is a bullish indication. And as long as we stay above this weekly bull market support band, the risk reward setup continues to favor buyers over sellers here. So that's my view on proxies. So if you're going for something that is volatile and acts as a high beta play to Bitcoin or any other crypto tokens, you can go for something that has a strong and reliable business model and for something that is tangible, right? Not purely based on speculation. Of course, this company is based on speculation as well, but it also has something tangible behind it, which are fundamentals, which are transaction fees and things that can be easily tracked.
Yeah, I completely. I mean, Matt, I heard you're bearish on Coinbase. Is that right? No, I'm just kidding.
It's incredible. It's an incredibly has potential to be very, very explosive. Yeah.
Yeah, I mean, I think we have talked about Luca about Coinbase too, and it's been stabilizing. A lot of people calling for lower levels around like the 240 zone, and it's been stabilizing where it's at right now. It's got a lot of support. And Matt, I don't know if you want to show some of the you're seeing here to, see if there's any confluence that you're seeing.
Yeah, I can just pull up my Coinbase chart here. Let's switch the screen. And one thing I want to show is the monthly chart, and essentially it's trying to finish off the month of August above the 886. And if you guys remember in the beginning where I was talking about IWM, about the 886 and that importance, and once things can find stability above it, then usually that goes to fib extensions above. And fib extensions above on log scale, they look pretty juicy up there, right? You got the 870s, the 1260s, you got the 2156. I mean, Palantir, mind you, is at this 1.618 from its 2021 top, right? So if this goes Palantiring, like Kat has been talking about for a while, that could be 2156. All right, that seems not imaginable right now, but I think it's very, very possible if we have a super explosive altcoin season, and if Ethereum just goes to the moon and just everybody starts jumping in on Coinbase and giving them a lot of fees, and plus they have all the institutions with Coinbase as well. I just think a lot of things are in their favor to just rocket to the moon. So I'm mainly just watching this 318.95, just seeing stability around there. And sure enough, we closed the week back above it last week, and there's 5 days left in the month to see if it can close the month of August above it. And if so, that'll be 3 months in a row. That'll be building a base, previous resistance, flipping to support, previous resistance right here, flipping to support. I mean, you could not really ask for a better looking chart. Like, also a giant cup and handle getting ready to go to the moon. So I think this is more confluence of altcoin season is underway.
Yeah, I also like to share some confluence too in terms of like the buy zone that Luca has. Just a couple of things. Let's just looking at the weekly chart. One thing I like to look at is I like to pull out the weekly Bollinger Band. And in general, I find the 20-week moving average to be pretty telltale. If it ends up breaking down below the 20-week moving average, like in general, it likes to touch a low Bollinger Band. But if it's able to hold the 20-week moving average, especially if it's like really upward sloping like that and push price higher, then you're going to end up having another leg higher. So currently, over here, consolidation, we're not able to hold 20, low Bollinger Band. We're not able to hold 20, low Bollinger Band, right? Now we have a rising 20-week moving average. It looks like we're about to get a little bit closer to it. And that could be a very strong zone in terms of support. If it breaks down, so be it. But I just don't think it's necessarily going to end up doing that because it's also a confluence support zone with the weekly Kijun over here or baseline over here, which also happens to be the monthly Tenkin or the conversion line over here. This whole zone is also support for multiple reasons, including the fact that if you look at the anchored volume weighted average price from this pivot over there, which also is with my again arc over there. You can see how it's kind of beautifully touching that area over there with a lot of confluence around 293 level. And so far it's been holding. And so far the reaction is pretty decent. Now, it is lacking some momentum right now. It is consolidating sideways. It is trying to cool off a big giant move that it just had all the way from 140s all the way to the 440s. It's been trying to cool off that move here. So you're losing some momentum here. But there's nothing wrong with the way that is cooling off. If I also just look at a lower time frame here, and I can get rid of the again over here. I just want to show you one more confluent thing here, which would be like a lower time frame fit level. And I think this would be better served to look at a linear scale level here. It's just basically retraced to a 0.5 linear level over there. It's been holding extremely well at the same level right there at 293. A lot of things are telling us that it's probably going to end up holding, and that if it dips down below, that's fine. That would be a little bit of a buy zone, which is why I bought, like down here. And if it goes down further, I would buy more. But at this point, I'm like just basically holding and seeing what it's going to do next. But I'm seeing very similar things that Luca and Matt are seeing in terms of confluence for Coinbase. This is my second biggest stock position. So back to you, Luca.
It's actually my third biggest spot position.
Is that right?
My second is Tesla.
Ooh,
awesome.
Lots of conviction there. I actually see good things with Tesla too. I don't know if we're going to talk about that, but go ahead, Luca.
Yeah, I mean, I think Tesla has some great potential of performing really well moving forward. Like, the price has just retested the prior downtrend's resistance line here. After seeing a breakout a couple of weeks ago, we have now seen the retest. This range has also coincided with the weekly bull market support band, which has been a really important POI over the last couple of weeks, as you guys can see here. On the low time frames, there are a couple of things I'm worried about, which is the fact that the price is nearing this high time frame resistance range, which has acted as a reversal point in the past, as you guys can see here and here as well. So it also coincides with the 0.786 Fibonacci POI, which is something I'm tracking closely. And generally, what you want to do is be somewhat bullish at support and bet on that particular stock with a clear invalidation level, because generally when we near especially a strong support like we've seen a couple of days ago, the risk reward favors buyers over sellers, which is a positive thing. And generally what you want to do when we near resistance ranges is to be somewhat more conservative and ready for potential rejection, especially if that resistance range has been acting as a reversal point in the past. So that's pretty much what I'm seeing on Tesla, and I love their overall business model. I think that they have a really high potential of dominating the overall EV market, and they are doing a lot of great things with their robotaxis rollout, with Optimus. So I think that in the future, like in the next couple of months and even years, those sort of things have a lot of potential, and yeah, I'm bullish on that. I believe that Tesla is, I personally don't see Tesla as a short-term investment. I know a lot of traders talk about Tesla being a stock that is very easy to trade. I agree with that, though I see Tesla as a long-term investment. And basically, my strategy has been pretty straightforward over the last couple of months. Each time the price went into this high time frame support range between the $250 and $300. That's where I basically increase my spot exposure, and that's pretty much the story of how Tesla is now my second biggest holding.
Yeah, very nice.
That's awesome. I know, Matt, you're also bearish on Tesla, right?
No, I mean, I do a weekly update every week on YouTube about it, so I'm sure people are sick of me talking about it. But yeah, I see it broke out of that little triangle I saw too, so it's almost good to go. It needs to break above that 350, 360 zone, but once it does, it'll be going back to 400s. Yeah.
Yeah, I agree. I don't even have to show charts. Like it's been range bound for a long time. I think the lower part of the range is like 290s, 300s. When it got to the lower part of the range, people are screaming to like 240s, and
Yeah.
and now now it's like at the upper part of the range that everybody's traumatized and they don't think it's going to break out. But yeah, I think 350s, 360s is going to be the zone. If it breaks out, then all-time highs are coming. That's what I see.
Yeah, and the opportunity to go below 300s again was basically last week, and it did not even do that again. It actually, yeah, successfully, as you can see on Luca's screen, it successfully backtested the triangle. So, I mean, usually successful backtests indicate that things are going to probably trend higher from now on. So I would not be fading it or shorting it or whatever. I think it does want to gradually go higher over time. Doesn't mean it's going to explode. Probably not. But once it does break above the higher time frame resistance, I think it can.
But rate cuts,
Right.
though.
Rate cuts. Oh yeah,
But
the
rate
rate cuts are
though.
also bearish now too. Yes, yes.
Yeah, no. Thanks for sharing your chart, Luca, on Tesla. I think we're all more or less seeing a lot of confluence, in terms of what we're seeing. So, anything else that's in your mind, Luca, or like I got a couple questions for you if you don't, but anything else you want to kind of bring up?
Actually want to talk about rate cuts for a bit.
Yeah, let's do it.
So rate cuts, the way I'm seeing rate cuts right now, so this is the same thesis I've been talking about since early April, basically, is that at some point we're going to have rate cuts, and rate cuts in themselves aren't something fundamentally bullish, because I believe that they signal Fed's intervention, and every time we have Fed's intervention, whether it's to hike rates because inflation is getting out of control, or whether it's to cut rates to stimulate consumption, it signals that the trajectory of the economy isn't sustainable anymore. So that's why I believe that seeing Fed's intervention in any way isn't something fundamentally positive. So I thought to myself that, okay, if we were to have rate cuts, because the Fed is trying to avoid any sort of economic downturn, then market makers would have to first distribute. So the way they would do that is by making everyone think that there are something bullish, right? And in themselves, they are, because they have the potential of bringing more liquidity to the markets and making credit more accessible to people and so forth. And also they have the thing of speculation, because they tend to bring a lot of speculation to the markets, with people betting on how rate cuts could benefit risk assets, which we're currently seeing, I believe. And this has sort of kicked off the risk on environment with Powell's speech on Jackson Hole on Friday. That sort of kicked off this risk on environment, because this is pretty much the start of the positive narratives, in my opinion. And I think that this eventually leads up to the distribution phase, and it allows market makers to do the thing they have first intent to, which is to distribute after accumulating all throughout early 2025 with the liquidity traps we've tracked at the time and all of those liquidation cascades. And yeah, that's how I see rate cuts. I see them as something that will lead to the upcoming risk on environment and to the next major move higher in the broader markets, especially in risk assets. But I also see them as the thing that precede a potential economic downturn in the coming months.
Yeah, I think it's tough to say. I think all those things that you're saying are absolutely correct, but the only question would be the timing of it. Because eventually rate cuts are indeed, doing it in a way that Matt, if you don't mind sharing my screen here, it's just so that we have something to have a look at too in terms of what we're talking about. I do think that what you're saying is correct. It is whenever you have a more euphoric sentiment going in, especially one that was set the tone by Jerome Powell and Jackson Hole. That really reminds me of like the a few years ago when he was setting the tone, saying, "Hey, we're going to change direction. We're going to hike the crap out of you and just basically suck liquidity out of the system." And that's the tone that they set, and the market just kept tanking. I think this is the tone that they're setting to really saying that how they're going to do their monetary policy over the next year or so, or longer. That really is a pivot to me as far as I'm concerned. Like they're more worried about like the labor markets, they're more worried about those kinds of things, and they're not as worried about inflation. That's the message they're getting, and we're finally getting the positive narratives to kind of support that. the whales are going to take the institutions are going to take this opportunity to distribute higher. Sure. The question is how long. I do not know. And also the thing that everybody is getting scared about in terms of like rate cuts is they automatically just thought about the two times in recent history that rate cuts has been extremely bearish. The first time was the great financial crisis, and then before that was the dot-com bubble. Right? Those are absolutely, terrible times because they were really doing that to trying to, support the financial system. Sure, but the other times before that and the other times after weren't as drastic. And there was one time that the rate cut was extremely drastic, and that turned out to be a great thing. We ended up paying for it later. But during this rate cut cycle here in 2020, 2021, that was actually extremely bullish for the market, right? Your Fed funds rate here, SB 500 down below. And then during these other areas where the cuts were smaller and there's a lot less, volatile rate cuts, the market generally either respond to it either equivocally or they respond to it pretty positively. When inflation was extremely high, back in the 70s, and when the rate was extremely high here, and when they were starting to finally cut in the 80s, the market actually reacted to it extremely well. And to me, I think this might actually be a little bit more similar to the current situation that we have right now, because we no longer have the kind of inflationary pressures that we were having a few years ago. And the Fed is looking and say, hey, we can gently cut. Like, they didn't say anything about emergency cut. Their messaging has been extremely careful. And they're doing it in a very gentle way that it might actually turn out to be positive for the market. I just, don't necessarily see this as a bad thing. But could it end up being a signal for whales to want to distribute? Yes. How long does it happen? It's hard for me to say. That would be kind of my counter argument to your thoughts. I'm not necessarily disagreeing with you. I'm just kind of looking at history and trying to find some other correlate in terms of what the Fed funds rate cut, kind of means for the greater market. Minimally, I think that it could go either way, and it's kind of like a little bit of a wash to me. I still would rather just follow what the global liquidity is doing. I would much rather follow what the trend is doing for the assets. I would much rather follow what Russell 2000 is doing, what Ethereum is doing. But if it comes to like the rate cut cycle, it's hard for me to say, whether or not it's bullish or bearish. And if it's bullish, how long it's going to last? Is bearish, how long it's going to last? Because it's very extremely variable. That's kind of my message on that.
Yeah,
I agree with that. So
Yeah,
I think that it's a level by level market, and moving forward, as the Fed will continue to reduce their interest rates, the best approach will be to track other macro confluences like the labor market and how inflation reacts, and the PPI and home sales and other things, because they will be crucial in determining whether we'll get something that has happened in the prior three major rate cut cycles, 2000, 2008, and 2020, because in 2020, the Fed has reduced rates because to stimulate consumption rates due to the pandemic, really. And that's when the markets crashed. And then they later on pumped when the Fed has fully transitioned towards a quantitative easing environment. So that's pretty much the way I'm seeing rate cuts. And moving forward, what I would like to see is the labor market first remaining resilient, because that will give us an indication that, okay, maybe the economy will continue to remain strong. Seeing delinquency rates remaining low, meaning that people are not defaulting on their debt, that will be something important as well. And yeah, I mean, if we look at historic price action, rate cuts in themselves, as I said, I don't think they are something fundamentally bullish for the markets because they signal Fed's intervention. But this time, if we have the appropriate confluences, the labor market remaining strong and things like that, maybe we could have a soft landing. But for now, I think that's not my base case, and that's why I'm discussing more the idea that rate cuts could precede a potential economic downturn before they become actually bullish, and the Fed finally transitions towards a quantitative easing environment where they raise liquidity, they inject more liquidity in the financial system. But until then, that's how I view rate cuts, and that's my opinion on them.
Yeah, no, thanks for sharing your opinion. I think it's good to see from different perspectives. Matt, you had something to say about Jerome Powell and rate cuts?
Yes, the money printer guild. No. I think when it comes to rate cuts, you just follow the charts. And the last thought for my side of the screen is essentially this fib-based channel, right? This speaks 1,000 words compared to rate cuts. And I think if you look at this channel right here from November of 2021, it's been resistance. It's been resistance, 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 resistance forever. And these are mathematical. This is like a Fibonacci just at a diagonal, right? These are mathematical numbers. And what do we see right now? We see breaking out, right? It's breaking out of the channel. So I think it tried before back in 2024, but it failed. But now it's kind of flipping it to support. So I think if we're looking at some things objectively, I don't think the noise really matters. I don't think the rate cuts are going to be bearish. I think the charts are saying that they want to go higher. And that's even including the SPY. So I don't think rate cuts are going to be bearish. I think the charts are speaking for us. And I think we don't need to factor any other narratives with that scenario because it looks like things want to go higher. So that's my final thoughts.
You guys think on Powell announcing that the 2% will not be their target anymore for inflation and that they're raising it? Because I've been thinking about this for the last couple of days, and I think that this is part of on the broader scheme of things. It's part of the Fed adapting to the roaring 20s, which is something that we have discussed before. I think that this period resembles quite a lot what happened back in 1920 when we had a similar macroeconomic environment and we also had a massive technological advancement, which technological advancement relates more to productivity. I think that that is what it all comes down to, productivity and having a higher output. Back in 1920, we had that exact same thing with the Industrial Revolution. Now we're having pretty much the AI revolution, which increases the productivity and the overall output tenfold. And that's what I think it relates to. And this is also why the macroeconomic environment the current macroeconomic environment resembles quite a lot that period, because when we have these spikes in productivity, we generally tend to have also inflationary periods as people are either making more money or spending more, or financial assets are performing better because of having higher revenues and so forth, stronger balance sheets. So I think that the Fed may be adapting to that in raising their overall target on inflation. What do you guys think on that?
Well, I think things are just becoming more deflationary with AI, with technology, with everything. So businesses can be starting to save a lot of money. And I think the rate of growth is becoming more exponential, right? Things that used to take like years to develop are taking months. So things are just something that we never really seen before, ever. So I think what we're seeing is unprecedented, even from the 1920s, right? Things grew faster back then, but not as near as fast as things are growing right now. So I think the rate of growth is going to be very explosive, and things are going to be less inflationary than ever thought before.
It's getting pretty interesting in terms of how the world is becoming. I'm gonna say, like, a lot of people are seeing this like white collar recession where employees for like big tech companies or some like some other companies, they're starting to get laid off. I think companies are starting to like lean size, and that might have to do with the fact that there is a lot more adoption with AI, a lot more adoption with efficiency, and basically all these things are getting figured out. Palantir is a real thing now. Like commercial company, like its growth is exponential, and there are companies that are really using the products and actually are lean sizing their their own companies and increasing productivity. So that actually leaves a lot of people like potentially not having as much work as before, while the deflation is happening, while the Fed is trying to print money. Like the way that I see it right now is, if you want to trying to protect your money and your wealth, like I think you need to have some kind of assets to protect you against this kind of macro environment that we're developing, because it's a lot of changes are happening. I think eventually what's going to happen in productivity is going to go up to the sky. Everybody's going to have like enough services and goods and things like that, and then there's going to be more there's going to be, how do you say that, there's going to be more need for the government to actually just need to take care of the folks, instead of having to trying to squeeze as much out of people, because they might not need them as much anymore. And there's going to be like a crisis on one hand with people when the economy actually continues to increase their production and increase their output. Extremely bizarre for me to think about.
But so money is not going to matter.
Well, I mean, it's probably going to, that's the thing, right? Like you have to have people you have to have some kind of differentiation of social status. If it's not money, it's going to be social points. How many followers do you have on X? How many like subscribers do you have on YouTube? How many social, like, are you in good standing on your Uber, ratings? Like it's going to be those kind of things that matters more, and even in Star Trek, money doesn't matter in the show, but you still have ranks, right? And certain like races are still going to be more discriminated against others. Like there's always going to be some kind of inequality that's going to happen. But overall, I think the productivity is increasing. I think everything is, going to end up doing pretty well. So those are pretty interesting thoughts. I just wanted to end the show by saying, like, I think gold, in terms of cycle thoughts, I think gold had topped here in August of 2020. And that was kind of like the start of the IWM kind of, going up. Gold looks very toppy right here. It's got like all these distributive wicks up above. It has a hard time breaking above this 3,400 level. And right now it looks like there's rotation onto IWM, right? So I think that's happening. If you actually look at the timing of that, it's pretty interesting. Like the top over there for gold all the way to the top IWM, that was about 15 months. I wonder if the cycle lasts longer because of that. The other thing I also want to look at is the Hang Seng Index here too. It looks very bullish. This is very, very different from the previous cycles here too. Looks like Hang Seng Index wants to get it to 28,000. I don't know when that's going to be. But the last time, this is the Bitcoin top right here in December of 2017, is when you have like the blow off top for the Hang Seng Index for the Chinese market here. Here's the top for Bitcoin back in like November 2021. And before that, you have a little bit of exhaustive top for Bitcoin, but like Hang Seng really topped around February 2021. So this is a little bit of a different thing here. Like China looks like they want to keep printing money because they also have the same issue with youth unemployment. Like they have so much youth unemployment that they have to print their way out of deflation to stabilize their housing bubble pop, to stabilize all those folks. They're printing money like crazy. They're relying on things like AI, robotics, things like that. And their productivity is going through the roof, and they're printing money and trying to support that. And looks like their stock market wants to keep going up. I think this liquidity is going to end up rotating to Ethereum, to the crypto market, to IWM. I think we still got at least another few months going here. So, but I think it's a pretty interesting topic to talk about how like the world evolves. And that's the reason why I like, looking at charts actually makes me think about those kinds of things. So.
Agreed.
I think this pretty much wraps up our collaboration.
Yeah, it's been fun.
Sorry to take up so much time again.
Interesting.
But
no, man,
yeah, always great. Always great to hear your perspectives. I know Matt usually is just like, oh, I agree with him. Oh yeah, I agree.
Yeah. Okay. I just think the most of the things can be told the way the charts are behaving, and so like everything else is just noise. So it makes people emotional, and I think emotions make people make bad decisions.
True. I agree.
Yeah, I tend to agree with that. I just like to kind of like extract charts and trying to think about like the macro environment, and I'm not seeing anything too bearish right at this moment. I think we're getting ready for something great. Luca, any like final thoughts or anything before we go?
I think this pretty much wraps it all up.
Okay, we'll let you go.
Thank you guys.
All right, thanks
Appreciate you
guys.
again.
Have a good one. Take
All right,
care.
guys,
Bye.
it's been awesome.
Yep.
Thanks for joining. Bye.
Yep. Bye.